Hi, good morning. Today is October 12th, 2019. My name is Oluwale Okabolo with Sparkus Trading Corporation, here to bring you the prep report for Monday, October 14th on the S&P E-mini futures. Just to quickly recap yesterday, which was Friday the 11th. I took the day off, so I didn't put out a report. Had a pretty good week, didn't feel like working, so I just took the day off. But the conditions was prime for the market to have a breakout or a gap to the upside. I was in on this gap on the upside overnight, and that's what another reason why I just took the day off. I didn't know that we were going to still go higher. It didn't matter. Um, the conditions were primed for that. I talked about in the past several reports, so please start referring to the reports, I guess, from the beginning of last week and then prior week's report where I talked about the importance of this multi-week balance area, this white line. I'll show you on the bar chart real quick. Lee, I talked about this so many weeks in a row. This balance area and the significance of either breaking out, failing on a breakout, perhaps going to the destination, um, or no acceptance and we come back out. Coming back out of this balance area from Thursday, the market gap from the overnight never looked back. Why? I talked about it in a report. I talk about a lot of stuff, right? I talked about in a report that those who were playing this breakout failure, once we re-enter this balance area again, where are their stops going to be? Near the highs, somewhere thereabouts there, the balance area. Okay? And also those who were trying to play the breakout from the balance area, if it broke out, where are their stops going to be? Their stops going to be somewhere below the balance area high. It's just simple logic. So I understood that the context was there that if we come back out of this former balance area, there are going to be stops here. So what do you think happened? Why the market gapped and stayed up? It wasn't daytime or short term stops. It was more than likely a time frame higher than the day time frame that used the weekly chart, right? Longer balance areas. And if their stops begin to get hit, more than likely we're not coming back. And so was able to take advantage of that. And that's pretty much what happened. And the market opened and trade higher. We can say because of the China news, that's fine. The China news was a catalyst to allow the market to go higher, hit those stops. And these were basically, they were buyers, but they were buyers covering their position. And then you had the more savvy buyers, new money buyers, pressing them. And that's pretty much what happened. So let's get into the review or the prep report for Monday the 14th. This should be really easy. Right now, we're one time framing lower, 1 month. We're in a 1, 2, 3 month balance area. Within that 3 month balance area, we are in a 2 month balance area. Those who have been following me and my traders that I train, I've talked about this for a couple of weeks now. I know I definitely talked about it last week. I talked about watching September's open because as the market continues to trade higher, if we clips September's open, what are we leaving behind? A very deep, nice excess low on a monthly chart. A time frame way higher than the day time frame. So what happens if you leave an excess? What does that mean? We're probably going higher. And a good trade to get on, if you can swing it with options, is to, upon breaching this, you know where to put your stop and just sit back and watch the fireworks and see how far can this sucker go. Or if you buy a longer term option, you can go out a couple of months because if this excess holds, excess means excess. You could get a test, but more than likely in the months to come, more than likely, not a prediction, we still got to read, and that's with the caveat of geopolitical or economic or whatever kind of news. More than likely, you see an excess like this, a true excess, we're trading higher, but in the months to come, you know. So you can keep that in mind. For a daytime trade coming across September's open, I think in the this coming week is a It's a good trade to get on if you're aware and you're savvy enough, and you basically have the courage to take the trade. Um, September's open is 29.87. All right, let's go to the weekly. All right, I talked about the significance of this balance area. We're back out of this balance area, so it seems to be no acceptance. Market's moving higher. Also, what do you got? You got two excess lows back to back. You got a higher low. You got lower highs. You got a higher low. The overall trend on the weekly, the trend, not time framing, but the trend is up. We are time framing lower. But this is the shorter term. This is the longer term. The longer term always trumps the shorter term, but it doesn't mean we can't get any volatility or anything like that. So keep that in mind, okay, as we coming into next week. So right now we're in the midst of a multi-week balance area. I got 12, so it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. And when we open next week, if we don't get, well, yeah, we'll be 12 because if we open higher or lower, we're still in this 12-week balance area. So looking forward, when Monday comes, when we open, that would make the 12th week. Okay. So within that 12-week balance area, we're in a 4 week. I'm looking forward 1, 2, 3, and we open. That would be 4 as long as we don't open. Well, yeah, we'll still be in the fourth. It doesn't matter. 4 week balance area. Within that 4 week balance area, we have a 3 week balance area 1, 2, 3. And then we got a 2 week balance area that if we open Monday within last week's range, we got a 2 week balance area. So we just got balance, balance, balance. So what does that mean? You're getting a lot of rotation. You're getting a lot of rotation, and that explains the up and down. Even though the shorter term, we're time framing lower, barely, right? Because we almost took it out. On the long on a trend basis, we are time framing. We're not time framing, but we are trending higher. Keep that in mind. Looking at my notes, market showed no acceptance in that multi-week balance area that I've already discussed. And we have two back-to-back potential excess lows on the weekly, right? Lower lows, not lower lows, higher lows, and the lower highs are getting ready to it's being threatened. We'll see what happens next week. On the daily, we're time framing higher 1, 2, 3 days in a row. Pretty self-explanatory via the gap. The gap was the breakout that I talked about from this multi-week balance area. Just talked about the fact that we have stops from folks who short where you're going to put your stops. It's only logical. So it's just logic. Remember, we're competing against other humans, right? So you want to keep that in mind. Humans, in some aspects, as we know, this is not a psychology course, but we think alike, right? And we're all think alike in so many different ways, right? In so many ways, but yet different. That's what I meant to say. All right, moving on. Profiles. All right. What we got, if you look at the chart on the right, is what I call a reverse P formation. A P signals short covering by profile theory, but a reverse P is a term I came up with because we had the short covering, but then the market closed near the lows. So you have the P, but typically a traditional P, you're closing somewhere in the value area, if not higher. We're outside of the value area. So I call it a reverse P. Okay. So what we got is a reverse P. Value was clearly higher. We had a 29-point range, about 3.5, 3.6 billion shares. Okay, but nothing to scream home about. So going into Monday, the important reference you want to pay attention to is September's open because we talked about it. You can visualize it without even having to look at it again. You know what that means. We clip September's open. So you want to definitely pay attention to that reference. We also have a gap that could be filled, or at least there could be attempt to get into the gap. However, here comes the nuance. What we got is a daytime inventory imbalance. And one of the traders I train, he is notorious for taking these trades, and he is typically successful in doing these trades. So Riz, this is your trade, and I will be on this trade with you, provided, we see or I see what I need to see. But here's the trade, folks. We have clearly higher value. We have a prominent point of control at 11 wide. That is also an anomaly because it sticks out like a sore thumb. And we also have another anomaly. We have a 29-point range on 3.5 billion shares, I believe, of the New York Stock Exchange. So it's not tremendously heavy volume, right? So higher value, prominent point of control. Volume is not that spectacular for the range. And we closed outside the value area low when we have clearly higher value. So right now there's an imbalance, a daytime inventory imbalance. Also, I have a chart here that I use to confirm what I'm seeing. This is your traditional profile. This is a profile in reverse. This is time TPO. This is volume TPO. I mean, TPO. Time point of control, volume point of control. Okay, so this tells me that there's we're out of balance in the day time frame. So what typically happens with these daytime inventory imbalances, you usually get an adjustment in the overnight. That's what usually happens. So this is more of an overnight trade. Use that adjustment usually happens in the overnight. So going into Sunday night, going into Monday's trade, you should not be surprised if the market at least comes and correct this inventory. Doesn't mean we have to open back in here. Keep that in mind. At some point, it just needs to be corrected, and usually that move happens in the overnight. Anything more serious, if we're trading, we'll continue to trade. We're going to at least have value develop above the half back from Friday, if not trade higher. And we also know the significance of the September's open. Okay. Anything to the downside, you'll see value begin to overlap this gap entry. That means we're in the gap. Value overlapping this gap entry means what? We have clearly lower value. So that means this market could at least make an attempt. Doesn't mean we're going to fill it. It's a big gap, but at least make an attempt to fill the gap. That's it. I still have this reference of this multi-week balance area at 45. I still have that in because if we fill the gap, we're probably going to test this balance area again. Now comes the visualization. If we test this balance area again, that'll make one, rejected. Two, rejected. Three, we're probably going to try to test these lows because if the market is truly like is I don't want to say strong, but if the bias is on the long side, we should not get back within this multi-week balance area that we have already tested 2 weeks in a row. I'm just using simple logic. So if we fill this gap and we close below this re-entry of the balance area, then probably we're going to go and test to the downside, and we'll see what happens. We'll take it a chunk at a time. So those are the scenarios coming into Monday. If that overnight adjustment already happened, I would just, and we're opening in the center of range or center of value, I would strongly recommend you let the market kind of chop around because you're in a chop zone. So you want to let the market do its thing the beginning of the day. Wait a couple of periods, let the market shake out and show you its hand. So therefore, you know what direction you want to trade. All right, folks, that's all I got. This is Olawale Okabola with Spartacus Trading Corporation wishing you a great day.